Welcome to the Cambridge Real Estate Market Mid-Year Update. I love this moment of taking stock. So often in our day-to-day lives as realtors, we're totally caught up in individual transactions with buyers and sellers and specific properties, and sometimes we lose the forest for the trees. So I relish the opportunity to step back, helicopter up, and have a look at the Cambridge real estate market as a whole. Let's dive in and take a look at the numbers. During this same mid-year report last year in 2017, I talked about possible relief on the horizon for single-family buyers, a respite from the steady upward march in pricing. Well, it turns out that was more of a blip than a trend. Now we're back on pattern, and the average price of a single-family home in the first 2 quarters of 2018 was $1,875,000, higher than the previous high in 2016. An interesting metric to check out is price per square foot. It isn't a perfect metric when discussing single families because it doesn't take into account the size or quality of the lot. It only concerns itself with the size of the house relative to the sale price. But seen at a high level, I think it's still worth noting that the price per square foot for a single family home jumped in 2018 from $659 per square foot in 2017 to $778 per square foot in 2018. For the prior 3 years, 2015 to 2017, price per square foot had stayed within about a 4% range. From 2017 to 18, however, we've seen an 18% jump. So where the average sale price went up 10% year over year, the average price per square foot increased 18%, meaning that not only are prices rising, but that buyers are getting a little bit less for their money. Another blip but not trend was seen in the days to offer. That is the number of days it takes from when a property is launched on the market to when it goes under contract. In 2017, we saw this rise from 24 days to 28 days. In 2018, we've seen the statistic plummet down to 15 days, an all-time low as long as this metric has been tracked. The pace of this market means that buyers need to be well prepared, ideally with a well-formed relationship with a buyer agent and a lender, so they can pounce when the right property comes along. Another head fake we were given by the market last year was in the sale price to list price ratio. That is, how much a property actually sells for relative to its asking price. Last year at this time, we noted that the ratio had dropped slightly from 106% in 2016 down 2% to 104% in 2017. We wondered whether buyers were getting wary of bidding prices up so far above their asking prices. I guess not, as this year it is back up to 107%, indicating buyers' willingness to do what it takes to lock down a property. Let's end the single-family analysis with what is maybe good news for buyers. The number of single-family homes listed in the first and second quarter of this year is up by 37% over last year. That's great news, but what's even more exciting is when we break it down quarter by quarter. Comparing Q1 of 2017, we're up by 23%. Comparing second quarters is where we see an even bigger jump from 42 homes listed in Q2 of 2017 to 61 homes listed in Q2 of this year, a 45% jump in inventory. We have to go back 12 quarters to Q2 of 2015 to find a quarter with as many or more new listings. So it will be interesting to see whether this increased number of homes listed has a moderating effect on average sale prices or more likely on the sale price to list price ratio, as more homes mean the buyer demand will be less concentrated and more spread out. Overall, the picture in condos is pretty similar to prior years. Inventory moves down and prices move up. In condos, the listing inventory took another hit in its steady downward march, this year clocking in at 375 units listed in the first 2 quarters of 2018, a year-over-year decline of 3%. I believe this is partially reflective of the fact that many people are staying in their condos longer because they can't figure out where to go. With single-family listing inventory so constrained, the typical moving up cycle is less of a smooth and predictable journey. So with people staying where they are, fewer condos are coming on the market. It's like a game of musical chairs where everyone refuses to get up and find another seat. As we've seen in prior years, the bottleneck in inventory is causing prices to continue their climb northward. The overall average sale price for condos jumped almost 18% from $834,000 to $980,000, continuing a pattern of year-over-year gains in average sale price. Perhaps a more relevant indicator of value, we see that the average price per square foot for sold condos jumped a less dramatic, but still nuts, 8.6%, from $744 per square foot in 2017 to $809 per square foot in 2018. I'll be honest, this is the metric that makes me most uncomfortable and represents a 54% increase in the past 5 years. Can it keep going up? Sure. In San Francisco, the average price per square foot is a whopping $1,130, and in New York City, it's $1,469. But in general, our guidance to buyers is to use time as a hedge against potentially inflated prices. If you're going to buy in this market, make sure it's something that you can live in for 5 to 10 years, or that it makes an attractive investment property should you need to move in the shorter term. One positive note for buyers is that the average sale price to list price ratio has dropped for the first time in 8 years, from 107% in the first 2 quarters of last year to 105% in the first half of this year. This doesn't mean that prices are lowering. Indeed, we have seen the opposite, but it might mean that sellers are, knowingly or unknowingly, pricing closer to the expected value. It might also mean that buyers are taking into account higher list prices and aren't bidding the prices up so high in multiple bid scenarios. In multifamilies, we had a big jump in inventory in the first 2 quarters of 2018, up 37% from 54 in 2017 to 74 units in 2018. And get this, the average listing price jumped 35% from $1.7 million in 2017 to $2.3 million in 2018. So that is the original asking price of all multis listed. But when we look at those that sold, we see that the average sale price was in fact $1.94 million in 2017 and was $1.77 million in 2018. In fact, a 9% drop. So here's the interesting part. More sellers are listing more multifamilies, but a smaller percentage of those listed are actually selling. In 2017, 80% of listed multis went under contract, and in 2018, that number dropped to 66%, meaning that 34% of what is listed hasn't sold. So I think what we're seeing is sort of a bifurcated market in the multifamily sector, one rooted in reality and semi-reasonable pricing, and the other somewhat delusional as far as pricing is concerned. The latter group hears about this red-hot market and puts their poorly maintained and dirty two-family on the market for an astronomical price, and guess what? It doesn't sell. The market has seen dramatic appreciation, sure, but as far as multifamily buyers are concerned, they're not totally stupid. So pricing is still key, and for the properties that are priced to show reasonable value, bidders are still fighting over the good ones. Indeed, for the multis that sold, the average sale price to list price ratio was 106%, up from 103% in 2017. So that's a wrap for the Cambridge Mid-Year Market Update. For more information or to get in touch, please visit laurenholleran.com.